Well, hi, everyone, and welcome to Buffett and Beyond Research Saturday Stock of the Week for April 11th, 2026. And this past week, Meta was up 10% in just 2 days. Let's go see what's going on with this stock. And remember, folks, if you want to live on this beach like Jimmy Buffett once did, watching the sunrise, then you've got to learn how to invest even better than Warren Buffett does now. And Facebook, well, we know what Facebook is. It's owned by Meta, and it's the world's most popular social media platform as measured by the number of monthly active users. And I think it's, 3 billion or something like that. Meta, the company that owns Facebook, also owns Instagram and WhatsApp, two other extremely popular platforms. And the company's made many acquisitions over its history, most of which have been rolled into the company. But let's see what it's doing this past week that everybody is so excited about. Okay, shares of social network operator Meta Platforms jumped 6.4% on Wednesday afternoon alone after the company unveiled Muse Spark, which is its new proprietary large language model, a type of AI designed to understand and generate human-like text. This launch marked a shift toward closed source technology where Meta keeps its code private to better compete with rivals like OpenAI. Finally, somebody's coming in and competing, and hopefully he's going to make money out of it because we own this stock. Investors were optimistic that this move would raise Meta's chances of turning its multi-billion-dollar AI investments into profit. And the model's efficiency was also touted, and this is important, as it requires significantly less compute. Now, what does compute mean in this industry? It's the expensive processing power and the exceptional power that it needs. We hear about those AI build-outs and how much electricity they need. So we're talking about compute means the expensive processing power and hardware needed to run AI. So it's come up with something more efficient and maybe better than OpenAI. So we'll see where it goes, folks. And let's see what the 5-year averages are. The blue lines are the average large cap stock out there. The green line is Meta. And we're looking at the clean surplus return on equity over here. And when we look at the clean surplus return on equity, we think of a bank account. Would you rather put your money in a bank account that's earning 13.5% or one that's earning 24%? Yeah, I'll take either one, but I'd rather have 24% than 13.5%. And net income, the average stock out there is earning net income of 13%. Now, net income is the clean surplus earnings. Average stock 13%. Meta almost doubling that at 25%. And revenue, which is so important because you have to have that money coming in order to bring it to the bottom line. Here's the bottom line, but you've got to have that revenue. And the average stock averaging about 7.1% this year, and that's pretty steady each year, and Meta at 17%, more than twice as much. So it's got the revenue, it's bringing it to the bottom line, and let's see what it does to the stock. But first, I want to show you some individual numbers. Now, the net income, again, the clean surplus earnings, have been raised for 2025 and projected higher for 2026. This does not reflect the money that it will be projected to make with its new product. Now, the clean surplus return on equity is over 20%, and that's what we like to see in a growth stock in our portfolio. And I just want to show you this because I'm going to bring it out again. So it made half as much as it did in 2021 and half as much as it did in 2023. And 2022 was when the market was just bad. It was down 19%, and the NASDAQ was down 34%. So we saw a drop-off in what Meta actually made during a recessionary type period. But since then, it has come bouncing back nicely, and we even expect this return on equity to go up. And we'll see in a couple of weeks, folks, as the earnings season starts, and we'll see what it did for the first quarter. But again, these two numbers for 2025 and 2026 were raised on higher expectations. Well, 25 is over, so this is a real number, and it did very, very nice. Now, the income growth and the revenue growth we showed in the last chart were way above average, and what we're looking at is this net income growth below average. The net income growth for the average stock is 13%. Over 5 years, Meta is averaging 25%. But for next year, we expect this number to go up once we see what the projected earnings are when they come out with earnings in several weeks, and then they will also come out with projections for the rest of the year. So that should be very, very interesting. We'll look at that. Market cap down here, it's usually in billions because we look at large cap stocks. Now we can talk about trillions, $1.6 trillion that this company is worth. And years to pay debt, this is Buffett's rule of thumb, where he says, okay, if a company takes all the money it's making, how many years will it take to pay off its debt? If it just uses the income to pay the debt, and we're looking at about a half a year in here. So we don't even have to worry about debt during a recessionary period. And let us look at the last 5 years. It's up 103%. Black line is the S&P 500. Blue line is Meta. And we can see, and this is 2002. This is what I wanted to show you, because we could see that the earnings went down on Meta, and they just took this stock down. And boy, oh boy, we started licking our lips when we came toward the end of 2022, and the forecast started coming out for 2023 that it's going to be better. And a lot of folks bought down here, and they have done very, very well. And you can see right in here, over at the right, you can see this large jump up because of the news of Meta's new product out there. And if we want to take a closer look, let's go to the next slide. And this is only the past 5 days as of Thursday morning or Thursday afternoon. And black line is the S&P 500, and this is Meta. The news was on Tuesday and Wednesday, and all of a sudden this stock just jumped twice as much, almost 3 times as much as the S&P 500. So very, very nice move this past week. And we have Meta in our portfolio. It'll probably stay there. It's got so much buying power out there with so many people using its products, and especially Facebook, which everybody loves. So yeah, Meta is making a lot of money from advertising. So, folks, we had a fairly decent week this week, didn't we? So you go out, it's the weekend, go out, enjoy yourself. Just take a walk on the beach, go walk around the golf course. Those of you up north, it's springtime up there, so enjoy yourself. So you folks all stay well out there, stay safe, and we'll see you back here in a couple of days.